Per usual, everything on this channel is for educational purposes only and is not intended as financial advice. You know, it's going to be a spicy week when I start with the economic data calendar. Big one this week, hands down, is CPI, core CPI, etc. 8:30 a.m. EST on Wednesday. This entire week will be defined by this data point. Yes, we've got PPI the day before. We've got a bunch of Fed speakers. Okay, great, awesome. Just nonstop, right? Nonstop Fed speakers. But the big thing, hands down, is going to be CPI. All of my positioning this week is going to be relative to what I think about CPI, because even though the charts may lean into a bullish reversal, if the number comes out slightly above expectations, then markets go lower. Hot CPI means higher for longer, means stronger dollar, means risk off. That's my read anyway. CPI lower, much like unemployment higher, would be likely taken as a good thing to markets, saying that, okay, rates are coming down sooner rather than later. We won't have higher for longer. I'm just not super optimistic on that initial read, but hey, you can either trade before the number or trade the reaction to the number. I don't think we're going to do much this week until we see that number, but really it's next month. It's this month's CPI coming out next month that may kill the rally eventually anyway, but that's for next month to worry about. We're only 12 days in, but we are seeing a rise in month-over-month CPI. So that's not great. Year over year here could be flat, could be plus or minus 0.01%. I don't know. Core looks to be heading in the right direction. So I probably wouldn't blindly be in any large 100x leveraged alt position until I see that number this week, right? Unless there's some very obvious technical stuff going on, which may happen. I just doubt that. And I'll get to that, what I'm looking for, in a second. But we'll start with some fundamental stuff. We'll just rattle off some lightning round real quick. We're going to be looking at this chart every week for the next 100 days, probably. This is Bitcoin index performance since halving, according to Check on Chain. And you can't see this cycle really because it's sort of nested in with everything else. But for the most part, we don't do anything positive until 50, 60, 75, 100 days after halving. If we take off 2012, we zoom in a little bit, look, it's probably going to be a bunch of nothing, which is one reason maybe not to get super, super excited on any constructive moves to the upside anytime super soon. Looking at bull market correction drawdowns, in order for me to feel safe in a bull market, you want probably 25 to 30% drawdown. So we're not quite there yet. And for those taking notes, don't worry, I will list out all of these in a second. So we're not quite there yet either. Realized price, which is just the last time all coins moved on chain as an average, is quite low. Okay, that's a great bear market low, not necessarily a bull market low. For a bull market low, we're better off looking at the short-term holder realized price, which we are about there now. Now this could, we could go through this, under this, hug it. We could do a bunch of stuff, right? But much like the 20-week moving average, the short-term holder realized price tends to be a pretty good place where we find a bottom. So that's encouraging. Okay, it's not going to get me to say, yeah, we're super bullish right now, but it's encouraging, right? Looking at not moving average, MVRV, market cap versus realized cap. So you can see that realized value down there in the blue. This just measures as a multiple. What is the market cap relative to all coins ever moved on chain? Gives that a value. Then we get a Z-score. And the lower the Z-score in a bull trend, that's where you want to be as far as pullbacks, drawdowns, corrections, retrenchment, whatever, however you want to think about that. The deeper we pull this down on a fundamental basis, the better you're likely to feel as a buyer, right? So we're at 2. I like this probably 1 or less, around 1, to be super sure, it's going to match a 25 to 30% correction most likely. So we're not quite there yet. Puel multiple down significantly. This measures how rich are the miners today versus the past 365 days. You can see the halving effect there, slicing this pretty considerably. So the Pro multiple's down significantly. If we look at last bull market, we really don't get too far below 0.7. So we're in the wheelhouse, right? We're in the wheelhouse of less than 1, between 0.7. So that one feels positive and comfortable. If we look at global M2, global liquidity, it's rising-ish. It hasn't made new highs. So not a strong signal. It's not screaming at you, you know. We're still making the ascending triangle or whatever on global M2. Once this breaks out, I fully expect Bitcoin to break out. Hash ribbons, back to miners for a second. This looks like the hash rate, 30-day moving average versus the 60-day moving average. Again, if we're just like making a list of fundamental stuff that has a signal historically, if we look at when this cross moves from bear to bull, that typically has been a pretty decent buying signal, even throughout a bull trend. So as we have it currently, this has flipped with a cross. So it's just barely getting started. You know, a lot of these last quite some time. But if we're just looking for stuff, right? Okay, if we're looking for stuff on chain, miners, this is sort of outside of price a little bit. That's a good list of random stuff. And real quick, back to miners again for a second. Ordinals, inscriptions. I'm not going to say they're dead. They're not dead forever, but they're dead right now. Okay. Look at fees, look at inscriptions, and runes, you say. You say, what about runes, Joshua? What about runes? Well, runes as well look to be dead, assuming this data on Dune is correct and accurate. So look, if runes pick up, if inscriptions pick up, expect miners to do better. Great, awesome, right? But I'm not going to just randomly assume miners are going to do well when they aren't getting paid more than they were pre-halving. Okay, so here's the mega list, the alert list. I'll put this in the description of the video. I'll go over the technical stuff in a second, but for most of this stuff, we're not quite there yet, right? So you got a list of stuff that I'm personally looking for, where I'd feel comfortable buying the blood, buying the knife. Essentially, it all boils down to this, 50K, okay? Generally, where I expect most people to step in. The issue is the ETFs will likely have an amplification effect on price. If we move higher above 66K, we are very likely to see more flows come in. If we move below 60, we probably see more flows come out. That's just how people are. Until we have these wirehouses connected with sort of TWAP'd automated inflows, it feels like the people who wanted to buy have bought, right? For this price range from 60 to 70, let's say. They either bought lower, they bought slightly higher. It doesn't look like many people at the moment, for whatever reason, want to buy more. So we will need more buyers in the form of the wirehouses or whatever, right? We just need more buyers. We don't have it. So how do we get more buyers? Well, if momentum comes back, again, above 66, I'll lay out the case for that in a second. Or if, CPI is hot and we start getting very angry in the markets and break below 60, then I think we see more flows coming out. We did see a positive week last week for flows, ETF flows, but overall this is, peanuts relative to the past, or the first 12, 13 weeks. That's where all the action occurred. And since then, we've done a bunch of nothing. So before I talk about the BTC, on the technicals, let me mention today's video sponsor, Kraken Pro. Kraken Pro is a complete overhaul of the Kraken trading experience with a one-stop shop for advanced and professional traders. Kraken Pro enables efficient trading execution across multiple markets with a UI that allows for unique optimization tailored to your trading style. You can check out Kraken Pro with the link in the description of this video. Not investment advice. Crypto trading involves risk of loss. Cryptocurrency services are provided to U.S. and U.S. territory customers by Payward Ventures, Inc., PVI, DBA, Kraken. If we look at some of these alts, high caps relative to BTC, nothing's really screaming off the page here either. ETH BTC is on the final death throes of probably moving to 0.04 or lower. Sol BTC has calmed down quite a bit. Possible head and shoulders watch up here. Too early to quote unquote call it, but momentum clearly flattened out. Dogecoin hasn't recovered against Bitcoin since Elon on SNL. And ADA, just as an example, most alts look much worse, but as an example, this is down 90% still since the high. Multi-year lows So alts just aren't the move. They continue to not be the move relative to BTC. That's why analyzing, potentially overanalyzing BTC is much more important than thinking about, what's going on with my favorite L1 or my favorite L2 or my favorite meme coin. It just really doesn't matter, because if you get Bitcoin wrong, you're probably going to get all this wrong as well. Always keep in mind, North Star, the target, year from now, 333K by July 2025. If we look at July 2025 on the long-term power law, we get somewhere between 100 and 300, 400, right? It doesn't matter. It all sounds silly. It always sounds silly, but you can zoom in on this. Again, I'll put this in link in the description of the video. You can follow along when you're playing the home game, but this is the target. Sorry, this is the target over here, 2025, based on the cycles. Cycles could lengthen, shorten, widen, flatten, all that's possible, but that's where the 333 number comes from. Looking at the weekly cloud and the weekly candlesticks, 2 weeks ago we had the dragonfly. Last week we closed below the dragonfly. For those who are unaware, a long wicked candle with a thin body is a dragonfly. This one right here. Another very similar one here. This was the SVB candle. That next week was followed by a strong green candle. A large green candle. Here's another version of a dragonfly. A small green candle, an inverted hammer, if you will. So those certainly more bullish than what we had last week. Now, last week isn't going to help you with the prior week's candle as confirmation. It just wasn't there. There was nothing. It was more bearish than anything, right? Bearish engulfing. Based on support for the weekly key June, that's basically 50K. So I expect a journey to 50K if CPI numbers are hot. We could party this month and then just turn south next month with CPI turning up. I don't know, but it's all about this week right now. So on the week, if things get angry, weekly Tenkan, weekly cloud, certainly, but we're still bullish on trend broadly. On the daily cloud, we're still in the daily cloud. We're still below the daily key June. If either of those things change this week, flows will come back. Anything above 66K, 67, highly likely that flows come back. They will probably trickle in at first. They will probably lag price, just as they sort of lagged price in February by a day or two. But if we get a set of candles like we did in February, momentum begets momentum, volume begets volume, flows beget flows, right? So if you are bullish, that is the best thing you want to see. You want to see CPI come in slightly under expectations, and you want to see us above the daily cloud, above the key June. You want to see us completing this inverted head and shoulders. You want to see us above the Bollinger Band midline, which is the green line here, the 20-day moving average. In this case, you can see we've been below the 20-day moving average for 31 days now. Bollinger Bands are as tight as they were in February as they are now. The difference between February and now is we sort of hung out above the midpoint of the B bands for a week before we went higher. But if I had to summarize this entire week of things to watch, it's how tight did the B band squeeze? Do we get a daily close above the 20-week moving average, the midline of the Bollinger Bands? And then do we get a Bollinger Band breakout, which would be a daily candle close above the upper Bollinger Band? At that point, at least for the next month until the next CPI print, it's go time. Okay, it's go time, potentially to slightly higher on the all-time high, but I fully expect us to sort of run into massive resistance at 72.5. If we just compare and contrast this with February was coming off of ETF launch. Obviously, the GBTC outflows, flows generally flipping from negative to positive. This was actually pretty tight inverted head and shoulders on low timeframes. Kind of hard to see even on the daily. It was pretty small in the grand scheme of things, whereas this one you can probably see from outer space. It's pretty big. I see a lot of people talking about it. We also have roughly a descending volume profile. Not all of these are going to look textbook picture perfect all the time, right? That isn't important. What's important is you have some general idea. You take your pattern matcher that you evolved with over the past 10 billion years, and you figure out what this looks like, okay? If this looks like an inverted head and shoulders and walks like an inverted head and shoulders and talks like an inverted head and shoulders, that's how I'm going to trade it. I don't care how you trade it. I'm just telling you what I'm doing. So yes, I do think this could possibly be that pattern. We could still see slightly lower lows on the right shoulder. You don't want to see anything past the head of this pattern, but we're getting close. And again, we probably do nothing until Wednesday, and then Wednesday we probably see some crazy candle up if all the markets celebrate, right? But it's sort of, do you want to take that risk now? It's not really that much of a improvement on your risk reward profile if you just wait a couple days. Okay. So for me, longing here versus waiting just doesn't make sense. It just makes more sense to just wait. Okay. We can also watch this on the 8-hour cloud, just again, keep it simple, stupid type stuff. If we close above the 8-hour cloud, it's go time. That's roughly, 64.5 or something, right? So above the 20-day moving average, above the 8-hour cloud, if we get a 1050 cross, it's garbled in here, but if we get a 1050 cross, great. Otherwise, we're very likely to go back to the bottom of the daily cloud, back to the 20-week moving average, below the midpoint of this pitchfork, potentially to the yearly pivot at 52.5 eventually, potentially to the 200-day moving average eventually. So it sounds like I think we're going up or down. That's exactly correct. And if you know the CPI today, you can trade that, but I'm guessing you don't. So you wait for the CPI and then you figure it out. The good news is, if this does flip bullish, you'll see all the trend metrics flip bullish. The bad news is, we're sort of at the top of this pitchfork already. So either we kind of make a move and then go nowhere, or we turn it into overdrive and start a different parabolic advance that brings us outside of this multi-month trend channel. So definitely an interesting week, regardless of how you feel about the current price action. All these people saying, oh, I'm bored. Well, I'm not bored. I'm trying to figure out what the heck's going to go on here, because if you nail this with right size, correct leverage, who cares, right? Who cares about anything else? If you get this right, then you can have fun with your Solana meme coins all you want. But this is, to me, is where the meat is on the bone at the moment. This was an older idea. I still see people calling this, maybe this is some sort of bull flag or whatever. I think it's a bit too elongated to be a flag at this point. I think the inverted head and shoulders possibility makes more sense. This high and tight flag was definitely a flag, and it played out as such. But if this does play out as a giant flag, then, it's the same end target eventually. It's just maybe a bad habit to pick up and say, oh, I think this is that. Sure, maybe your pattern matcher is different than my pattern matcher. I don't know. But yeah, that's still, I guess, a possibility here. This is on the 4-hour. Again, you can look at this 6 ways to Sunday here for this setup Sunday. But it's all the same, right? If we start to make higher highs above 64, above 65, above 66, I love it. I love it every $1,000 up. I love it as a breakout. I love it as adding on strength. Love it all. You can also just watch the 4-hour on the BitX, which is the 2x Bitcoin ETF, or the other 2x Bitcoin ETF, MSTR, which again is at the top of its multi-month pitchfork. This is the 4-hour cloud. Very obviously to me, inverted head and shoulders attempt. The question is, where does this go, right? Okay, this breaks out, fine. Does it go to 3K? I don't think so. I don't think it goes to 3K. So just something to think about. Maybe not initially, but for next week, we'll talk about it. But again, something else to watch other than 8-hour cloud on the daily, 4-hour BitX, sure, right? If we're above the cloud, we're looking pretty. Moving on to some alts here. These still are the best forward-looking alts. BNB has some sort of ascending triangle. NEAR has a multi-week inverted head and shoulders. PEPE in multi-week inverted head and shoulders. BONK, also multi-week inverted head and shoulders. These look good because I think they all break up, but that all sort of relies on Bitcoin breaking up, which relies on the dollar not being stronger this week, which relies on CPI coming in at or below expectations. So these are all set up for success. Just need a catalyst. Looking at Sol on the daily in the cloud, roughly has maybe that inverted head and shoulders characteristics to it. But again, where does this go? It probably goes to, a local high retest. We'll see if it goes much farther than that. But that's still a great trade, right? That's still a great breakout trade. Looking at ETH, it's a little different. It's already below the daily cloud. It's got falling wedge characteristics. It may just grind this sucker out all the way down to 2,600. This is the 20-week moving average. This is the 200-day moving average. It's in the wheelhouse of what you'd expect. As far as trend is concerned, cloud loves you to be above the cloud, right? So that's not great right here. Or bullish TK recross. We have neither of those things. And that's just something else to watch down the line. That's not going to happen this week, most likely. But it's something to think about. Just general strength. ETH, it just, look, there'll be a time in a day to trade ETH. No doubt in my mind. Just like there was in February. I don't think now's the time for ETH. Moving on to legacy. Look, the dollar looks very strong still. It had a negative week 2 weeks ago. You could say, it topped off on XYZ candlestick pattern. It's still on the bullish side of a multi-month range. It's above the weekly cloud. To me, it doesn't look as bullish as it did in 2021, but it is still very much trend bullish. One interesting thing to think about, again, as this day approaches with Trump versus Biden, what does Trump want to do? Well, he wants to be Jay Powell. He probably wants to bring rates to zero, and he wants to weaken the dollar. So look, if he does all those things, Bitcoin's going to 300K easy. But until that day, this looks very bullish. Potentially even some sort of compound fulcrum pattern. Again, you had an inverted head and shoulders here that played out quite nicely. Here, I just don't see anything other than trend being fairly bullish. So do have to be careful as far as near-term expectations, right? There's this yin-yang between days relative to ETF, Fed rates, dollar strength versus weakness, and we're actually pretty correlated to inverse UJ. So this is Bitcoin relative to what's been going on with USD JPY. This is a inverted axis for Bitcoin. And if you're bullish BTC, you definitely don't want to see UJ go higher. And there's some basically built-in inevitability based on the rate differentials between these two countries that this should continue to go higher despite the interventions that have happened. So definitely not helpful. UJ going higher just is a different way of representing dollar strength. So you can think of it like that as well. Real quickly, again, the S&P looks bullish, looks great. I'll talk about more tomorrow. Bullish TK cross pending this week, back above the daily cloud. If there's anything that makes me more bullish crypto, it's seeing the S&P break back up. It's seeing the Qs break back up with near-term range targets of decently higher pivots. So all that stuff looks good. So, but again, this is going to turn bearish if CPI gets angry. I still like the same legacy charts I liked last week. Here's Morgan Stanley. I think it looks phenomenal. Still multi-month inverted head and shoulders breakout. Got the wrong cloud on here, but you get the point. It's still bullish on both clouds. Gold and silver miner out of Canada, WPM, looks phenomenal. Inverted head and shoulders breakout. COPX, inverted head and shoulders breakout. That's just where we are in the market. Okay, these are multi-year breakouts. You can say positioning is crowded long, that's fine, but I like the technicals for all those. XLE ascending triangle breakout back to the initial breakout site. So if you're a believer, you're probably adding here. This is the energy sector ETF. Looks okay. And then lastly, there's been some rumblings of GME coming back to life. It had quite a week last week. I think it was up like 40% or something, 45%. There is a world where, along with altcoins into Q4, if this can simmer long enough, that this also forms some sort of inverted head and shoulders. You get a bullish cloud twist on some high time frame cloud. You get some high time frame 5200 cross, right? There's a world where this is possible. Does it make sense based on fundamentals? Obviously not, but we're well beyond that in the world we live in today. So that's all for this one. Like, dislike, comment, share, subscribe, and happy trading.